This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordis. Thanks for joining us at XM.com. After sinking to the depths of Hades last year, the Japanese yen has staged a spectacular comeback. It is currently tied with the Australian dollar as the best performing major currency this year, capitalizing on a perfect storm of narrowing interest rate differentials, global recession concerns, and cooling energy prices. With the Bank of Japan raising the ceiling on long-term yields just as the Fed approaches the end of its own tightening cycle, monetary policy convergence has emerged as the new market theme, giving traders the green light to short Japanese bonds and buy the yen. Speculation is running rampant that the BOJ will take the next step in its normalization campaign when it announces its latest decision on Wednesday. The ceiling on Japanese yields was violated several times lately as investors bet that yields will keep on rising, forcing heavy interventions by the BOJ to defend its target. Meanwhile, markets assign a 35% probability for an immediate 10 basis points rate increase this week, which would mark an exit from negative rates. A decision to do nothing this week might come as a disappointment for the yen, although the broader outlook for the currency remains quite bright, as it is probably only a matter of time until the BOJ takes the next step. Gold is another asset that's gone on a rampage this year, gaining nearly 3% last week alone to settle at its highest level since April. The driving forces behind this rally have been the sharp declines in yields on the dollar, amid expectations that the Fed is about to roll out its final rate increases for this cycle. Central bank purchases played a big role too, as China and Turkey seemingly went on a buying spree late last year, boosting their gold reserves. A sense of euphoria reminiscent of the mood in 2021 has engulfed global markets, with crypto assets, meme stocks, and currencies linked to global risk appetite starting the year with a bang. A more cautious Fed profile now that inflation is losing its kick, China's economic reopening, and a winter heat wave in Europe that has diminished fears around the energy crisis have all come together to engineer a strong comeback in riskier assets. The market euphoria stands in stark contrast to the gloomy picture painted by most leading indicators and the earnings reports by major U.S. banks last week, which warned that economic momentum is fading. U.S. markets will remain closed today, celebrating Martin Luther King Day. This was today's Daily Market Comment. Thanks for joining us at XM.com.